Hi everyone, my name is Kevin, and I want to walk you through today's tutoring example using a problem from financial accounting. Now, like I mentioned in my other videos, our actual tutoring session will of course be much more discussion-based. I'll be asking you a lot of questions and we'll be working on the problems together. Today what I'm going to do is I'll walk you through how I think through this accounting problem and talk a little bit about my process as well. So the topic here is on financial accounting, and specifically we're going to be looking at a problem that has to do with journal entries for prepaids and revenue recognition, as well as determining account balances. So the question is, on January 1st, 2023, your company, which is in the business of renting commercial space, received $60,000 from a tenant as a payment to cover all rent for 2023. The two sub-bullet points are, what are the related journal entries on January 1st, 2023 and on January 31st, 2023? And also, what are the balances for the related accounts as of January 31st, 2023? All right? So what are the things that you're going to need to know to be able to actually answer this question? Well, there's going to have to be a few things you're going to need to kind of have an understanding of. First is, when and how to account for prepaids and revenue recognition. All right. Second thing you're going to need to know is how to calculate balances from essentially a list of journal entries. Okay, so those are the two kind of core pieces of knowledge someone would need to know to be able to answer this question. You need to have a good understanding of, hey, when and how do I account for prepaids? How do I even identify that? And the same thing for revenue. When and how do I identify what the situation is when it comes to revenue and how do I account for that? Second thing that you'll need to know is how to calculate balances from journal entries. Now, as I mentioned in my other videos, I list this here not necessarily because we would be doing the same thing as we work through each problem, although if that's a good fit for your learning style, we absolutely will. But just to show that as we go through, I'll be assessing for a few things that help me understand, hey, do you have the skills and the knowledge to be able to answer not just this question successfully, but other similar questions as well, really to make sure that you're prepared for success. And what that will enable us to do is, one, we'll be able to hone in specifically on those areas where you have gaps, right? So by assessing and seeing where your understanding is strongest and where there's some gaps, we can really make sure to spend most of our time on those areas where you need some improvement. And what that will also let us do then is go at your own pace and make sure that the session is tailored for you. So if it turns out that you actually have a mastery of some of these bits of information that you need to know, well, great. We can go ahead and go a little bit faster. And if it turns out that, hey, there's a gap there and that's where we need to slow down, well, we can adjust course accordingly. Okay, so that's the knowledge needed. So let's go ahead and go through this problem. So we see that the question is asking us to set up some journal entries for January 1st, 2023 and January 31st, 2023. So first thing I want to do is just understand, hey, what is the situation? And let's start with that first date of January 1st, 2023. Right? I just want to understand, well, what exactly happened here? And I'll say for any time that we're trying to figure out journal entries, the first question I ask myself is, well, was there any cash involved? All right, and what happened with that cash? As we can see here, yes, there was cash involved on January 21st, or on January 1st, 2023. We received $60,000 cash from this tenant. So I'm just gonna kind of write out right now, before I even do journal entries, I know that I received $60,000 cash. Okay, great. What else do I know that happened? Well, why did I even receive that $60,000 in cash? Well, I know I received it in exchange for rent, but the important part here is I know it's in exchange for rent that I haven't yet provided. Right? So as we see here, I know I got $60,000, But I also know it's to cover for rent that covers all of 2023. Well, if it's January 1st, 2023, yeah, I received $60,000. And I know I received it for rent. But it's not rent that I've actually provided to this tenant, right? It's still the beginning of the year, right? So these are the two things that I know that have happened. I've received $60,000, and that was in exchange for rent not yet provided. Now, the reason that not yet provided element is important is that you got to recognize, hey, in this instance, what is this tenant doing? Well, they're prepaying for rent. They are prepaying for it. So how does that translate into a journal entry? Well, let's go ahead and take a look at this one here. So if I'm setting up my journal entry here, so I know it's going to be January 1st, 2023. Let's look at our first bullet point here. I received $60,000. Okay, well, I received cash. How do I set up a journal entry to receive cash? Well, I know for a cash account, I would debit it, and I'm going to go ahead and debit that by the $60,000. All right. Now, what someone might do incorrectly is say, okay, I received cash, and it must mean since I'm in the business of, renting out space, I must have made income. I know to increase income, I credit income, and that's $60,000. All right. That would not be the correct entry here. Now, why is that the incorrect entry? Remember, when you recognize revenue, you need to have already provided that good or service. In this case, have we provided that good or service? In this case, that's rent. We have not yet actually provided any good or service. So what is it then that we are incurring here? Well, we actually have a liability. Right? Yes, we got some cash, but we now have a liability. We have a duty to this tenant to provide them with a good or service, in this case, rent. We haven't yet earned that income. So what are we going to credit here? We're going to credit unearned income. And this is a liability. Right? We haven't actually recognized that income yet because we haven't actually earned it. So I'm going to set up a liability here for $60,000 for unearned income. Okay, so that's our journal entry as of January 1st, 2023. We're recognizing that, hey, we got some cash for $60,000, but what did we get that $60,000 for? Not because we've actually provided a good or service to recognize revenue. What we've essentially done is we've taken on a liability to say, okay, thank you for the $60,000. I now have a duty to you, tenant, to then provide you $60,000 worth of rent throughout the year. Okay, so that's that first journal entry there. Let's look at our second journal entry then. Now we're going to go to January 31st. And I'll do the same thing. Let's just kind of write out the narrative. January 31st, 2023. All right. What's happened here? Let's ask the first question. Anything happened with cash? No. No exchange of cash, right? No one gave me additional money, at least as it pertains to this example, so nothing related to cash. Okay? What has happened is, well, 1 month has passed. And since 1 month has passed, what has happened? Well, we've then provided 1 month's rent. And since we've now provided that good or service, not only have we provided that rent, that means that, hey, we've also earned 1 month's rent and income, right? So at the end of the month, no additional cash has changed. But what has happened is, hey, 1 month has passed by. I've provided 1 month's of rent. Hence, I've also earned 1 month's worth of rental income. Okay, so let's go ahead and set up that journal entry there. I'll first put my date. Okay, well, nothing to do with cash. I know for sure I'm not going to be debiting or crediting cash. I know 1 month has passed and I've provided and I've earned 1 month's rental income. Well, how do we make a journal entry to recognize income? Well, I know to increase income, that's on the credit side. So I'll go ahead and set up my credit here. I'll call it rental income. Okay. And I know it's for some amount. What is that amount? Well, I know it can't be the entire 60,000 because the entire 60,000 was good for that entire year. So how much would we recognize after 1 month? Well, we could do some math here. I know if it was $60,000 for a full year, all right, and I know for every year, 12 months, right? So $60,000 divided by 12 months, that means it's going to be $5,000 per month, right? So every month that goes by, I've earned essentially $5,000 of rent. So in this case, 1 month has passed by, so I would have earned $5,000 in income. Great, I've set up my rental income. Well, I can't just have one side of a journal entry. There must be something else that balances this out. And let's think about this. Well, if what I did with our first journal entry is to say, hey, I am putting together, right, a journal entry that says I now have a liability for $60,000 as of the beginning of the year. Well, after 1 month has passed, do I still have a liability to provide $60,000 worth of rent? Well, no, because I've already provided that 1 month's rent. So what we're essentially saying for the other side of this journal entry on January 31st is, yes, I have earned 1 month's rent, and what has also happened is I have decreased that liability that I used to have by that same amount of $5,000. Right, so let me just make a line here to separate this. Right, now if I'm going to decrease a liability, that's a debit. All right, and I know that my unearned income, that liability, is no longer $60,000 at the end of 1 month, and I want to decrease it by a debit for that $5,000 that I've earned. Great, those are our two journal entries. We've set up a journal entry to first recognize that we received that cash and that cash was essentially a liability for us to provide rent. And then we set up another journal entry at the end of the month to say, hey, we have now provided that 1 month's rent, and hence we'll then both recognize that revenue and also decrease that liability, that unearned income, by that same amount. Okay,